Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about the federal inheritance and estate taxes, and I'm going to explain to you guys if you are required to pay tax if you had an inheritance, and what kind of estate taxes are required by the IRS and state income tax laws. So I'm going to try to simplify this in a way that's a little more understandable for you guys. So let's get going on the video here. So how this works is the estate taxes comes into effect upon your death for whoever inherits that estate. Okay, so upon your death. Now, if the estate value is less than $3,500,000, then the receiver of the estate is excluded from taxes. They are only required, so just make sure you understand this, they are only required to report and pay taxes if the estate has a value above $3,500,000. So that's important to remember, because that's going to exclude most of you out there from having to pay tax, and a lot of people are fearful of this and think that whatever they inherit they're going to have to pay tax, but that's obviously a pretty large amount, so there's going to be very few percentage of people that are going to be above that amount. There are certain items I'm going to go through here, they're going to be added towards the value of that estate that you may not have thought were going to be part of the estate. So number one, any life insurance payouts that can be attributed to the estate and will be taxable if you go above the amount. Most annuities payable to the estate will also be taxable to the receiver. This is all if we go above the $3,500,000. So everything that I say is assuming you go above that amount. Any property transferred to the estate within a 3-year period prior to the death can be applied to the total value and become taxable. This is a very important part I want you to think about. You can deduct a lot of items like funeral expenses and debts owed. Some of the debts that I'm talking about are credit card debts, mortgages, and any taxes owed. I've seen a lot of people out there that don't take the time to see what kind of debts that person had, and then a year later they find out that they were $200,000 or $300,000 in debt in various items and didn't know about it. And if they would have applied those debts to the estate, they would have had to pay no tax. So it's a really, really important. I'm trying to emphasize this as much as possible, because spend the time to find all the debts. Pull the credit report if you have to. If you can find a way to get the full credit report, check that out. That should show most of the debts that are outstanding. Go through the financial records of that person. Spend the time to figure out what those are, because that could take you below the $3,500,000 and not have to pay tax. Because if you don't, you end up paying tax, and then you end up having to pay still all those debts. So it's very important. The estate tax is reported on IRS Form 706. Okay? I'm going to take you to this form real quick, and we're going to go through it. The Form 706. Now, if you do the return directly online, it's going to bring up Form 706, which you can do through our site and fill it out for you. But I want to go through the form with you guys so you get an understanding of what kind of items you need to gather to be able to complete the form. So let's go to the form real quick. So here it is, Form 706. The top part is just going to be the information, just basic personal information that you should have no problem getting. Alright, this is the important part here. Part 2, the tax computation. This is going to be the gross estate less the exclusion amounts. Okay, so the total gross estate value, you're going to put it in here. Box 2 are going to be those deductions that I talked about. So you'll total that up and it's going to give your amount into box 2. Now again, like I said, if you do the return online, it's going to automatically fill out this form for you, and it just makes it so much easier. But I want you to have an understanding of the items that you're going to need to know. Box 3, tentative taxable estate, okay, before state death tax deduction. We'll go to box 4, adjusted taxable gifts made by the descendant. You can see this is a pretty technical form, but a lot of people end up going to a tax attorney to have this done, but you really don't need to, because when you do it online electronically, it makes it so much easier. Okay, and we have some other, I'm not going to go through all these boxes because I think it's going to confuse you just more. But what I try to tell people is the most important thing is to gather all the expenses, total up all the related funeral expenses, total up all the debts of that person, to try to offset the value of that estate. Just remember, you want to get below the $3,500,000, because if you do that, then you don't even have to file it. Okay? You won't have any taxes owed. You don't need to file it. So make sure you do that. I'm going to take her to our website real quick, harborfinancialonline.com. Here we cover all the areas of tax, credits, deductions, areas like the estate tax, different ways to lower your tax and increase your refund, following all the laws and regulations. Because there's just lots of ways you can lower the tax, but people just don't really understand the tax. And we try to simplify it for you guys. So this is our site, harborfinancialonline.com. You can do a quick free online calculation of what your refund's going to be. We'll go back to the video. Okay, so remember form 706, if you do it online, it's going to bring in that form for you. I appreciate you watching my video. I have lots more videos on tax out there. You can just go to YouTube, do a search for us, harborfinancialonline.com. You can prepare the return online or just do a quick online estimate. So thank you, and hopefully you'll check out some of our future videos.